Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in corporate filings. Today we're diving into a report so exciting it might just put you to sleep, and that's exactly what they're hoping for. But don't worry, we'll make sure you stay awake. It's the Adaptiv Select ETF Semi-Annual Shareholder Report for the period ending April 30, 2025. The headline, folks, this ETF seems to be playing it safe, investing heavily in US Treasury bills. But is it too safe? Are they missing out on bigger gains? We'll dig into the numbers and see what's really going on. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss your takes on any of today's revelations. Let's get started. First off, this is a semi-annual report, meaning it covers 6 months. This report gives existing investors a snapshot of how the fund has performed. A quick glance shows it covers November 1, 2024 to April 30, 2025. Let's jump straight to something everyone cares about: costs. For every $10,000 invested, the fund costs 51. Now, that's where the cost paid as percentage of investment is 1% annualized. This is a percentage of how much of the fund is eaten up by expenses. Whether that's good or not all depend to the other ETFs that invest similarly. Next, let's look at key fund statistics. The fund has net assets of about $121.4 million and holds only 4 different investments. This lack of diversification may be something to keep in mind. Its portfolio turnover is 111%. This means they're actively trading, having turned over the entire portfolio slightly more than once in a 6-month period. If you believe they can make good trades, this might be attractive. If you believe they can make good trades, this might be attractive. The 30-day SEC yield is 3.22%, which represents the income earned by the fund over the past 30 days. This is an indicator of the current income being generated. This is what they have earned, including any fee waivers. The 30-day SEC yield unsubsidized is also 3.22%, meaning they don't have any waivers. Time to see where the fund is putting its money. 97.6% of the fund's net assets are in United States Treasury bills. Almost all of it. This means they're prioritizing safety. The rest of the fund, 2.5%, is in First American Treasury Obligations Fund, and that makes the total fund 100%. At confirmation, 97.6% of the fund's net assets are invested in United States Treasury bills, and 2.4% is in cash and other holdings. This further emphasizes the fund's focus on low-risk investments. Let's transition into the meat of the report, the financial statements. This section provides a deeper look at how the fund is doing. Digging into the schedule of investments, we see a detailed breakdown of the fund's holdings as of April 30, 2025. Again, the vast majority is in US Treasury bills with tiny bit of money market fund. This part confirms what we knew from the beginning: they value safety the most. The total short-term investments amount to $121.26 million. There's also a note that liabilities exceed other assets by a tiny bit, resulting in total net assets being $121.37 million. The amount is not significant, but that's still something to note. Turning to the statement of assets and liabilities, we find that investments are valued at $121.6 million. After subtracting liabilities, we get the net assets of $127 million, which we discussed above. The statement also shows about shares issued and outstanding of 3,000, given a per share net asset value of 34 taverning dollars, and it's how much each share in the market is worth. The statement of operations shows the fund's income and expenses. Total investment income is $1.09 million, but after deducting expenses of $51,739, the net investment income is only $580.21. Trading had a net decrease of $1.64 million due to depreciation, leading to an overall net decrease in net assets of $1.07739. The net investment income is only $505 all deducting expenses of $514,007.39. The net investment income is only $580,520,000, $44 million, to an overall net decrease in net assets of $1.06 million, all net decrease. In net assets of $1.6 million, looking at the statements of changes in net assets, we get this period versus the last year. There was a net increase to the value of investment by about $21 million the previous year versus this tier's net decrease of $1 million in value. This primarily from trading operations and depreciation costs. The biggest change in net assets came largely from capital transactions, with proceeds from shares sold, increasing net assets in both periods. But here you can see the massive differences, almost $50 million increase of capital in the last 6 months, versus only about $8 million the previous year. Finally, the financial highlights provide a per share breakdown. The net asset value increased from $32.86 to $34,048, resulting in a total return of 5.62%. But last year, the total return was 47.14%, so this ETF is playing a very conservative style, trading almost guaranteed modest gains, then hunting to get better returns. The financial report also offers lots of notes and legal points, which for the majority of companies usually include some things to consider carefully when evaluating the company. However, these notes from the ETF itself don't really add too much more context, so we'll skip them. Let's move straight to the analysis. So what's the story here? Adaptiv Select ETF is playing it incredibly safe, investing almost entirely in US Treasury bills. This offers stability and low risk, but also limits potential growth. It's a classic low risk, low reward strategy. Now, looking at these results more broadly, Adaptiv Select ETF seems best suited for investors prioritizing capital preservation, saving the money, rather than aggressive growth. If you expect economic turmoil and are worried about losing money, this ETF might be a good fit. However, it's essential to consider the opportunity cost. With interest rates low, the returns from Treasury bills might not outpace inflation. Investors could potentially earn higher returns elsewhere, albeit with more risk. In short, Adaptiv Select ETF offers a haven in uncertain times, but be aware of its limitations. It might be too conservative for those seeking substantial growth. Alright, that's our breakdown of Adaptiv Select ETF's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description below, where you can chat with some of the smartest investors on this platform. Thanks for watching. See you next time.